Welcome to the Saturday edition of the Tech Stocks Daily Podcast, folks. While the markets took a breather for Good Friday, the world of tech doesn't pause, and neither do we. Today, we're diving into the whirlwind of activity that's shaping our favorite tech giants. From Google's strategic pivot away from podcasts to NVIDIA's eye-watering 82.5% stock surge fueled by AI fervor, we've got the inside scoop. Plus, we'll unravel the controversies and legal challenges casting shadows over Meta, not forgetting Microsoft's ambitious Stargate project with OpenAI. It's a packed session reflecting the ever-vibrant tech landscape, so buckle up and let's get into the nitty-gritty of what's moving and shaking in the tech world. Google's departure from its podcast app reverberates through the tech industry, marking a significant shift in the platform's strategy towards podcast content. With an impressive 500 million downloads, Google Podcasts struggled to capture a significant market share in the US, where it was used by merely 4% of podcast listeners. This underutilization led to a pivotal decision, discontinuing Google Podcasts for US users effective from April 2nd, while the app remains operational for users outside the US. This move signals Google's pivot towards enhancing the podcast experience within its YouTube Music platform. The closure announcement, initially made by the YouTube team on September 26, 2023, aligns with Google's broader ambition to weave podcasts into the YouTube Music ecosystem, promising a richer experience with unique YouTube-centric features such as community engagement, enhanced discovery, and seamless audio-visual switching. This strategic redirection underscores Google's commitment to creating a unified, all-encompassing media consumption platform on YouTube Music, envisioned as the superior destination for both podcast fans and creators. Moreover, the migration process from Google Podcasts to YouTube Music has been laid out in detailed guidance provided by Google, complete with direct in-app notifications to US users, ensuring a smooth transition ahead of the July deadline. Google's cessation of podcasts illuminates not only a shift in strategy, but also highlights potential security risks inherent in such transitions. The discontinuation phase poses a fertile ground for cybercriminals, where the confusion and urgency to migrate data could lead to increased susceptibility to scams, credential theft, and the circulation of malicious apps masquerading as legitimate ones. This vulnerability underscores the importance of vigilance among users during the migration period, as Google aims to mitigate security risks through clear guidance and support channels. This development epitomizes the fluid nature of digital services and platforms, where user engagement and strategic realignments dictate the evolution of offerings. Google's decision reflects a broader trend of tech giants recalibrating their services in response to market dynamics and user preferences, striving for integration and symbiosis across platforms. As Google pivots towards a YouTube Music-centric podcast model, the tech world keenly watches this transition, anticipating the impacts on the podcasting landscape and the broader media consumption patterns. In today's tech whirlwind, Meta found itself at the heart of controversy, highlighting the challenges and unintended consequences that emerge as social media giants venture into new monetization strategies. At the core of the buzz, Facebook began incentivizing creators for engagement, leading to an onslaught of spam and an alarming surge in illicit account sales. The initiative, aimed at fostering a vibrant creator economy, inadvertently opened Pandora's box of fake engagements. Creators, in a bid to cash in on Facebook's generous payouts, previously capped at $55,000 a month but now unlimited, have resorted to forming groups dedicated solely to inflating each other's engagement metrics through reciprocal likes, comments, and shares. Terms like 10-10 became the secret handshake in these groups, signaling a mutual exchange of engagement on 10 posts. Moreover, the allure of easy money led to a thriving black market for Facebook accounts eligible for the performance bonus scheme, despite Meta's strict prohibition on account trading. Groups with thousands of members emerged as marketplaces for buying and selling these golden tickets. This brewing storm of inauthentic engagement and account trading underscores a fundamental shift in the social fabric of Facebook, once celebrated for authentic human connections, now mired in skepticism over the legitimacy of online interactions. Adding fuel to the fire, Elon Musk, the tech maverick behind X, lobbed allegations against Meta for falsely claiming credit for sales that originated from his platform. The accusation arrived hot on the heels of a hefty $7 billion lawsuit filed against Meta by advertisers, targeting inflated ad viewership on Facebook and Instagram. Musk's disdain for Meta isn't new, but this recent salvo emphasizes the escalating tensions between the titans of social media, amid broader critiques of the industry's impact on mental health and societal discourse. As Meta navigates the choppy waters of legal troubles and public scrutiny, it's clear that the quest for innovation in monetization and audience engagement is fraught with complex challenges. The saga unfolds as both a cautionary tale and a pivotal moment for social media, pressing the industry toward introspection and, hopefully, more authentic methods of fostering creator and user engagement. Today's buzz around Microsoft involves an eye-popping collaboration with OpenAI, named Stargate, a project that reads like science fiction but is firmly planted in today's reality of technological advancement and AI aspirations. Microsoft Corp and OpenAI are reportedly engaging in a collaborative effort to create a supercomputer project named Stargate, with a budget that could soar to a staggering $100 billion. The anticipated operational date for this behemoth of digital intellect is pegged for 2028. The core of the project involves constructing a data center that will host the AI supercomputer, supposedly 100 times pricier than some of the most extravagant data centers today. The project will require several hundred acres of land and an energy supply of up to 5 gigawatts. This move comes on the heels of Microsoft's acquisition of a 407-acre pumpkin farm in Wisconsin last December, which could hint at the project's vast land requirements. The initiative highlights the surging demand for AI-capable data centers, driven by the rapid uptake of generative artificial intelligence technology. Stargate isn't just another data center project. It's the crown jewel in a series of supercomputer constructions planned over the next 6 years, designed to bolster the capabilities of OpenAI's artificial intelligence. Microsoft has already committed over $13 billion to OpenAI, showcasing the immense financial and strategic stakes involved. OpenAI uses Microsoft's data centers for its generative AI system ChatGPT, while Microsoft gains exclusive rights to market OpenAI's tech to its clientele. This dynamic solidifies Microsoft's focus on AI, amidst insider concerns that it's becoming overly dependent on its relationship with the startup. The project, however, faces significant challenges, notably obtaining the required server chips amidst a market controlled by a handful of companies and addressing the substantial energy demands, with alternative power sources like nuclear energy being considered. The acquisition of AI chips and managing the technological hurdles of maximizing GPU performance within a constrained space and avoiding overheating present considerable technical feats to overcome. Microsoft's engagement in Stargate underlines the company's long-term commitment to AI advancement in partnership with OpenAI. This ambition puts Microsoft firmly at the forefront of the race for AI dominance, signaling a robust belief in AI's potential to reshape technology and society. And in today's tech whirlwind, NVIDIA has sprinted into the limelight, not just with a casual jog, but with a meteoric rise that sent its stock soaring a jaw-dropping 82.5% in the very first quarter of 2024. Now, why is everyone suddenly so gaga over NVIDIA, you ask? 2 words, my friends: artificial intelligence. And not just any AI, we're talking about generative AI, the kind that's got the power to whip up brand new content like it's a piece of cake, be it images, sounds, you name it. This generative genie escaped the bottle back in November 2022, thanks to OpenAI's ChatGPT, setting off a mad dash among tech titans and startups alike to board the AI Express. But here's where NVIDIA truly shines. Their data center GPUs, especially the flagship H100 and the upcoming beasts H200 and Blackwell, are the secret sauce to accelerating AI and high-performance computing workloads to light-speed levels. And when we peek at the numbers, oh boy, it's like staring into the sun. We're talking about a revenue and adjusted EPS explosion by 265% and 486% respectively in their latest quarter. Yep, you heard that right. This ain't no typo. NVIDIA isn't just riding the AI wave, they're practically building it as they go along. With the AI revolution just warming up, NVIDIA's locked and loaded for what seems like an endless growth runway. And here's a kicker for you. NVIDIA's CEO, Jensen Huang, didn't just stumble upon success. He navigated NVIDIA through some real thick and thin, going back to the drama of 1996 with Sega, admitting mistakes and avoiding potential collapse. It's a story not just of technology, but humility and sharp strategy steering a now $2.2 trillion company. So, what do you think? Is NVIDIA's AI-powered ascent just the beginning, or are we watching a tech titan in full bloom? Dive into the comments and let's dissect this digital dynamo's dizzying dash to the top. Today's stock spotlight from our tech news gazes directly at NVIDIA, and spoiler alert, it's a buy from me. But remember, always do your own research too. Here's the deal. NVIDIA's stock has been on a mind-blowing ascent, rocketing up 82.5% just in the first quarter of 2024 alone. This isn't just your everyday stock uptick, this is a space launch kind of growth. The catalyst behind this astronomical climb? Artificial intelligence, specifically the generative kind that can conjure up new content faster than a magician can say abracadabra. What's really catapulting NVIDIA ahead of the curve is their data center GPUs, the H100 and its upcoming successors, the H200 and Blackwell. These aren't just chips, they're the warp drive enabling AI and high-performance computing work to leapfrog into uncharted territories. Given this backdrop, the reason for a buy suggestion on NVIDIA is perhaps as clear as the daylight. We're not just betting on a company, we're investing in a frontrunner in the AI revolution. The demand for AI capabilities is skyrocketing, and NVIDIA's GPUs are the backbone of this wave, powering everything from AI models to entire data centers primed for the future. But again, amidst this excitement, don't forget the golden rule of investing. Do your homework. Stocks can be volatile, markets fluctuate, and there's always risk involved. NVIDIA's monumental rise is impressive, but keep an eye out for market trends, competition, and broader economic factors that could affect your investment. Happy investing. Today's tech market activities have illuminated a fascinating spectrum of strategic shifts, legal entanglements, and undoubtedly colossal advancements across the NASDAQ-listed tech giants. Google pivoted from its podcasts app to enhance its podcast experience within YouTube Music, signaling a substantial strategic redirection. Meta plunged into controversy with Facebook's incentivization strategy for creators, sparking an ecosystem of spam and illicit account sales, further entangled by Elon Musk's allegations and a hefty lawsuit against Meta. Microsoft took tech ambitions to new heights, unveiling a jaw-dropping collaboration with OpenAI named Stargate, aiming to create a supercomputer project with a monumental budget, hinting at Microsoft's ironclad commitment to AI dominance. NVIDIA, in a dazzling display of market triumph, showcased an 82.5% stock surge, largely thanks to the burgeoning field of generative AI, where NVIDIA's data center GPUs are playing a pivotal role. As the tech landscape continues to evolve at an electrifying pace, these developments underscore the complex interplay of innovation, legal challenges, and strategic maneuvers that define the sector. From Google's strategic podcast's pivot to NVIDIA's AI-fueled ascent, the day has been a rich tapestry of action, ambition, and for some, adversity. For more intriguing summaries and analysis, don't forget to like, subscribe, and share this video with others. Your engagement helps us thrive and keeps you informed. Make sure to return tomorrow for another round of top tech news as we continue to decode the complex world of technology for you.